The S&P 500 had an unlikely champion today in Hormel Foods, which led the index higher as it rallied nearly 15%, responsible for a phenomenal quarter. I call Hormel an unlikely champion because the whole packaged food space has been out of favor for a while now. Wall Street's worrying about the GLP-1 weight loss drugs. Plus, Hormel had a big gap down last October when it rolled out some long-term financial targets that Wall Street didn't really love. In fact, a little over 2 weeks ago, this stock hit a 52-week low. But this morning, Hormel reported a stunning quarter with better-than-expected sales driven by 4% volume growth, not pricing, volume, and a 7% earnings beat off a 34-cent basis. That's really big. While management didn't raise the full-year forecast, the quarter itself was so strong that it sent the stock into the stratosphere. Can it keep flying? Why don't we check in with Jim Snee? He's the chairman, president, CEO of Hormel Foods to get a better read on the quarter. Mr. Snee, welcome back to Mad Money.
Hey, it's great to be back with you, Jim. Thanks for having me.
All right, so, Jim, this is just a stunning quarter. A lot of people didn't see it coming. Can you give us the breakdown of what made it happen?
Yeah, it was a really strong quarter, Jim. And what was really nice about it, it was so broad-based in the success. It was across all of our business segments, retail, food service, international, marked improvement in our supply chain over a year ago. You know, inventories down, fill rates up. Really, by any measure, as you look across the spectrum, a really high-quality beat by the team.
Now, there's been volume growth in food service and international. That was really kind of reminds me of a pure growth company, not what I'm seeing from a lot of the other companies in your category.
Yeah, you know, our food service business really is operating from a strong advantaged position. We've talked about it over the years, where it is so mature in terms of the portfolio they've developed, the relationships they've developed, the direct selling organization, and it's all about creating solutions for the operators. You know, our international business had a tough year last year. It bounced back earlier than we thought this year, but we know that they're on track for another good year in 2024, and that's really nice to see.
Now, I always knew, and we talked many years when you got Planters, that Planters would become a standout because it's really the only brand that we want in the segment, frankly. But I didn't think it could come on this strong. What do you think happened that it just really ignited?
Yeah, well, we're really excited. We've really hit our stride with Planters, Jim. And again, you know, we think about the innovation that we've put into the market and that we're bringing forth. And so, you know, I think we sent you some great innovation with our Planters Duos, which is really exciting. Last year, we launched our flavored cashews and a specific advertising campaign against it. We've gained distribution. You know, we've increased our advertising against it. We've changed our advertising strategy. You know, last couple of years, we had done Super Bowl ads, and this year we've moved to an always-on campaign, a new campaign, Nuts, which is really connecting with consumers.
I like
You know, the one thing I'd mentioned, I mentioned flavored cashews. And what's really exciting for us is the way that it's connecting with a younger consumer. It's bringing a younger consumer into the category, and that's really what we knew we could do.
Well, I see something else happening in addition to that, Jim. On these GLP-1 drugs, a lot of people worried about food companies. I look at your portfolio, and it is uniquely set up because people aren't getting enough protein. That's what all the doctors will tell you, that the big problem with the GLP-1s is frailty because it loses muscle as well as fat. When I look at your portfolio, you've got the protein portfolio.
Yeah, I couldn't agree more, Jim. We are so well positioned with this protein portfolio that we've built. And, you know, one of the things that we are very intentional about is always thinking about the balance. And so, you know, we think about affordable protein. We think about indulgent protein. We think about natural and organic protein. We've got meat, non-meat protein. So really, you know, no matter how you think about our portfolio, you're going to encounter protein, which is a really important part of any diet program, and especially with these new weight loss drugs that are all the rage.
It also seems like you're gaining share in almost every single one of your verticals.
Yeah, our team's doing a great job. I mean, we're maintaining or gaining share with so many of our retail brands. You know, you mentioned Planters. It'd be remiss not to mention the Skippy brand. And like I said at the outset, this is really broad-based beat. And so that's what's really exciting for us. Within our retail segment, strong volumes, food service continuing on their trajectory, and really nice recovery in the international business.
At the same time, we can't forget Applegate still going strong the whole time, right?
Yeah, absolutely. Stephen McDonald says hi.
Oh, thank you.
But the portfolio continues to resonate with consumers. We continue to innovate with Applegate and expand distribution. It's on target, it's on trend, and it's a business and a brand that we continue to invest in.
Now, Justin's is a brand that I see young people eating all the time. I mean, just having to know enough young people to know that this is the preferred brand. How big can that nameplate be?
Yeah, it is a bit of a specialty brand, and when we think about nut butters in particular, almond butter, that is more of a niche play, but it does have a broad-based portfolio, and we've seen great growth in confections, and so when I talked earlier about, having value protein or indulgent protein, that's a great example of indulgent protein that sets our portfolio up for success.
Now, the last thing I need to ask is I can't avoid talking spam, teriyaki spam, maple spam, boutique items, collector's items, or good to eat? What do you think?
Great to eat, Jim. You know that. Maple spam is the latest flavor that we've introduced. You think back to pumpkin spice spam, figgy pudding spam, now maple spam. I will tell you, give you a sneak preview. We've got a couple of really neat flavors still yet to come in the next year or so. And so you have my promise that when those are ready to go, I'll bring them back to you. But the spam team continues to do a great job. The spam brand continues to resonate with consumers. And again, back to the topic we just talked about, a great, affordable source of protein that is meeting all of the consumers' needs.
Well, look, you've got the right portfolio. It's terrific. The numbers are shining. And congratulations, Jim, for just an amazing quarter. Good to talk to you again.
Yeah.
Thank you.
Great. Good to see you, Jim.
Okay, that's Jim Snee, CEO of Hormel HRL. Amazing. Amazing quarter. The best in the whole food group. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.